talk a little bit about Kevin brought up this idea of maybe even permanence versus temporary. There are some things that may change permanently with regard to behavior and everything else, and some things that may just revert back to the way they were years ago when this is all said and done. Let's talk about your view of this. Is anything temporary or permanent with regard to the investment themes going forward?
Well, I think in addition to all the things that Kevin mentioned, I mean, who's going to want to sit in a middle seat on an airplane ever again? Who's going to want to go to a movie theater? Who's going to sit in another crowded theater for a concert? All those things are things that we'll have to deal with. I think those things are real. But I think we would focus on the kinds of things that we can actually measure as to the difference between temporary and permanent. So in the latest non-farm payrolls number, for example, we had only the first glimpse of the types of labor damage that we're going to see to the economy, which was 700,000 jobs or so lost in the non-farm payroll in the establishment survey. And about 170,000 of those were listed as permanent job losses. I think we're only scratching the surface, but if that gives an idea of the kind of magnitude of temporary versus permanent, it might help us. Also, we have looked with my colleagues at BNY Mellon at dividend futures, which is also very interesting because that market is predicting that it's going to take something like 10 years to get back to the dividend levels that we were at before the crisis. So that is on the order of World War I or the Great Depression or the 1918 Spanish flu epidemic, that it's going to take us quite a bit of time to get back to where we were before. Dividend futures in the Great Recession of the 2008-2009 period took only 3 years to get back. So that gives an idea that some pieces of the market are really predicting a much more long-term recovery. And I think that points to the idea that there is going to be some real permanent dislocation to capital and labor resources in the economy.